Hello traders, welcome to another daily analysis. Today is December 12th, Monday. Right now we are at 6:15 p.m. Eastern Standard Time. So let's just get into it. First thing first, I have to post my last London session analysis here, which was about 8 hours, 16, 12 hours ago. So you can read through it, but basically what I'm doing right now is because I trade pretty much 24 hours, and it's not literally 24 hours, but because I trade London session, and then I take a nap, go to sleep, and wake up and basically do a daily analysis, and then go to sleep and wake up, do another analysis. So it's like every analysis is only 4 to 6 hours apart. It's pretty much I'm in the market 24/7, because there's only so much can happen in these 4 to 6 hours. So basically that's why I post here, and the London session analysis you can read through if you want. But basically everything is exactly the same. So today I was mentioning that over the weekend we have few data, but nothing important. There's no tier 1 data, and the most important thing was the OPEC meeting, where the OPEC member and non-OPEC member actually made agreement for the oil curve. So that's of course a very positive news for oil market. And then that's why we opened the Monday London session, Asian session, with a large surge into a WTI market. Now today Monday was another quiet session as usual. There was no tier 1 data. And this week there's a lot of important data coming out. But really the most important driver will be the central bank decision, which I think we have 3 central bank decisions coming out for this week. But of course the most important thing will be the Wednesday's Federal Reserve meeting, and I will go over the calendar later on. But because of like the economic data, right now it's really again sentiment driven, but you just have to watch out when the news events comes in, especially if they are big enough. Equity market had a little bit correction today. WTI, although we closed higher, but if you look at the daily candle, it actually tried to reach 55 per barrel, but failed to push above that. So we actually give us a sort of like a inverted hammer, a sort of bearish kangaroo tail. Again, that doesn't mean it's going to go down. It just means that the market, relatively speaking, still has a lot of doubt over OPEC meeting. Because if you look at the factual base that they actually already made, again, it seems like another positive news, but the market is just not confident enough for the OPEC. And there's certain reason to that, because in the past they did make a lot of agreement, but they never really fully committed to the agreement they have made. So in the past, whenever OPEC makes certain oil curve, they always only reached about 50% or 60% of the volume that they say they were going to reach. And that's why the market has lost a lot of faith toward OPEC. And that's why you're going to see things like this keep going. You have a huge buying power, but at the end of the day, it will all giving the gain back to the market. That doesn't mean the oil market will go down, because fundamentally speaking, it is going to go up, as for now, the oil curve really, it's just the economic cycle. It is going to go up when they artificially reduce the supply. Now, the question is how far it's going to go and how long it's going to go. And that's really the question we're going to ask. But there's no doubt the direction is going to go up. So, right now, again, as mentioned, it's a sentiment-driven market. And of course, until this week, we can see a lot of central bank decision. But honestly, most of the decision has already been priced in. So really, there's not much surprise. On the contrary, you might see a lot of reversal movement coming in this week. So if, for example, people are expecting Federal Reserve to hike the rate, and if they does hike the rate this Wednesday, you're actually going to see a sell into US dollar. Same as Bank of England. If the rate is unchanged, then you're actually going to see a buying into British pound. So it's just a reversal effect into this kind of market right now. And of course, as also you have to mention that right now, December 12th, By the end of this week will be December 19th, and then it will be Christmas and Boxing Day and New Year for the last 2 weeks of December. So a lot of people are not going to trade. You're going to expect thin liquidity. Now, thin liquidity does not mean it's not moving. On the contrary, thin liquidity for forex market sometimes actually move the market quite largely because you don't have much barrier. You don't have a counter trader. But just be careful when it's thin liquidity. Because of that, that's why you actually have to be careful, because it's a one-way street sometimes. Another thing is that people might basically take their profit before they take off for the holiday. So you might see a lot of contradicted move. You might see a lot of selling into US dollar, a lot of selling into Australian dollar or New Zealand dollar. It's nothing to do with the currency itself. It's just because people are profiting and they try to, pretty much finish up the year so they can report to their investors or themselves. So, again, US dollar, once again, it's the strongest currency we have fundamentally, sentimentally. The only thing you need to watch out is right now things is kind of volatile and you don't have a clear direction. You're going to be an up and down. The reason is because part of trader are wanting to take profit ahead of the Federal Reserve meeting. The other part of trader wants to get into the trade before the Federal Reserve meeting. And also you have a lot of doubt right now into the meeting. There's no doubt that the rate is going to be hiked according to futures market, but it really comes down to the comment, what kind of comment that Yellen is going to give. And right now, people are kind of worried that maybe the dollar is too strong. And as you know, that if the dollar is too strong, it's not going to help the U.S. economy, especially the exporting business in 2017. So maybe the Fed will try to talk down U.S. dollar. That's one guess from the articles I read. But nevertheless, we don't really care. It's just too much guessing game. So right now, I'm only know that fundamentally, sentimentally speaking, it is still strong. So I'm still going to buy at a deep, but I'm pretty much going to either move everything to break even or just get out of the market before Wednesday's meeting. And on Wednesday, my game plan is really, first of all, to see what's the result. And then second of all, listen to the actual, read the actual statement. If there's a conference, listen to the actual conference. So I'm not going to jump in. A lot of people make this kind of mistake. They try to jump in, and really you don't really have much probability in this kind of thing. It's best for you to actually pay attention, be patient, and listen to the comments and the press conference, then place your bet. And don't be afraid that, the market has already moved 50, 100 pips. Because in this kind of events, it's not a big surprise if it moves to 300 or 500 pips. All right, it's very possible. So don't be too impatient to try to grab that initial 30 or 50 pips, because more often than that, you are going to get stopped out in this kind of market environment. So the best way for me, at least personally, I actually play very passively in terms of trading this kind of heightened risk events. So I either getting way before the events, like now, 2 days before it, or I get it after the events, and actually, hourly after the events when I'm sure, but I don't want to get in at the events, especially in this kind of events, unless we have a very certainty, unless the comment is very positive or very negative, and we have to see on Wednesday afternoon. So that's pretty much the direction for US dollar. Another strong currency, of course, is Canadian dollar. It's continued to be supported due to the oil market. And as mentioned, right now there's no doubt that the direction of the oil market is going up. The only doubt is that how far it's going to go, how long it's going to go, and how much retracement we have during this one-way movement. So that's the thing you're going to watch out. Still respect the support and resistance in price action. No matter how strong you have for the fundamental conviction, the market is still composed by traders, and traders still look at the support and resistance. So you do still have to pay attention to that. And but in general direction, Canadian dollar is still going up as long as the oil market is keep going up, and it looks like it's going to go up fundamentally speaking. The negative currency, of course, is still Euro dollar, Japanese yen, Swiss franc. Now, Euro dollar suffered by last week's ECB decision. And again, the decision is actually neutral. If you really have to look at it fundamentally, they did extend the QE, but they also diminished the volume. So it seems like a neutral decision. However, we don't want to drive the market, right? We want to really play around the market. So it seems like the market treated very negatively by and large. So that's why euro is quite negative. Not only that, again, as mentioned, euro has a lot of political unstableness in its own bloc countries. Also, euro right now versus other currency, even versus British pound, is kind of weak. So that's why euro is being sold largely because of that. Japanese yen, Swiss franc, no doubt about that. They are in this easing environment. So really no point, just no chance for them to go up. But they will go up when we have a big global risk events. Then they will benefit from the safe haven inflow. Australian dollar and New Zealand dollar continue to be strong economically. Although we have the miss from Australian dollar last week, okay, the GDP data, and this week we have some employment data coming. But because of the positive data from China, in a way, the Chinese data actually surpassed the Australian data itself, and that's just how strong the relationship is for Australia and Chinese. So Australian dollar and New Zealand dollar both are still strong, but we have to watch out for the US dollar, because what happened, the relationship is that whenever the US dollar gains momentum, it's kind of pressure Australian dollar and New Zealand dollar. And the reason is because for investors, the three currencies are really in the same category. So investors buy Australian dollar and New Zealand dollar because, first of all, they are strong economically. Second, they are both relatively high yield. So people like to buy them as a carry trade. Now, if the US dollar also shares that same characteristic, if the US dollar is also can be a carry trade currency, and if now the Federal Reserve going to hike the rate, or US dollar will also become a high yield currency, relatively speaking, then that will take away a lot of buying attractions into Australian dollar and New Zealand dollar. People actually want to favor and buy US dollar. And that's why whenever you see US dollar gaining a lot of strength, it's actually sometimes pressure Australian dollar and New Zealand dollar. Of course, this is not a hard science. You just have to look at the price action. And if you see that effect, then that's pretty much the reason. But other than that, you can still buy these two currencies, Australian dollar, New Zealand dollar, versus the weak currencies such as euro dollar, Japanese yen, and Swiss franc. These two currencies are still very good, in the midterm to long-term perspective. Just have to watch out for the data, especially Australian is actually not doing too well for its own data, but the market highly disregard that because of the Chinese data continue to be strong, and because in the global point of view, even though it has the negative GDP data, it's still a very strong economy, globally speaking. British pound is neutral right now. Again, it's really highly sentiment driven. Now, you have a lot of people wants to short it. You also have people who wants to buy it. So for us, the game plan for British pound is you buy against weak currencies such as euro, Japanese yen, Swiss franc, and you can sell against strong currencies such as US dollar, Canadian dollar, Australian dollar, and New Zealand dollar. And most likely you only want to do it when you have a risk event. So for example, today there's nothing happening, so we don't really want to buy or sell British pound. But whenever we have a risk event, we can use that to continue buying British pound against the weak currency or selling British pound against the strong currencies, providing if the risk event is a positive or negative for British pound. So I don't really want to trade risk events for British pound at the moment, but we can always trade afterwards and then just go with the direction of that risk event, which I'll talk more about that later on when I pull out the calendar. Other than that, again, our current point of view is still the same, exactly the same as the London session. We still favor US dollar, Canadian dollar, Australian dollar, and New Zealand dollar. We still want to sell euro dollar, Swiss franc, and Japanese yen. Now we do have some economic release later on in the Asian session. So that might change our point of view for our next session. But that's our point of view for now. And if you look at the CLT-based futures contract position for this week, I just look at that for a sort of like a mid- long-term perspective. If you look at that, the biggest buying is still US dollar, and then it's Australian dollar, and then it's New Zealand dollar, and then the weakest one is still Euro dollar. So again, it's just give me a sort of direction to see, if you look at British pound, you still have a lot of short seller in the futures market who wants to sell British pound. And that's basically just to give you a sort of background in mind. Okay, so let's take a look at our 20-year currency pair. But first thing first, let's talk about my session trade, my intraday trade today. So today I actually took 1, 2, 3, 4, 5, 6. I took 6 trades, but all at very small position, and they are all in play right now. Because Monday, as mentioned, not much movement. I took a short of Euro CAD, and this is basically I took a reversal trade. So I got in, I just drew a very simple Fibonacci, and the reason I got in is because, again, fundamentally, sentimentally, I'm very bullish toward Canadian dollar and bearish toward Euro dollar. So as you can see, this huge movement from December 8th, December 7th, December 8th, and we haven't have a really significant retracement up until today. So that's why I got in first pair at 76% Fibonacci, and I'm gonna add on at 61 and maybe add on at 50. This is a reversal trade, so I often just draw a very simple Fibonacci and add on with the pending orders. And I do it by the key is not how you play. The key is really your risk management. So I do it. I don't put 3, 4 positions. Basically, I use small positions to add up into maybe 0.5% or 1%. That's what I do. I add up. I divide my position if I want to do this kind of pending trade. And the reason is because you have to understand the difference between reversal and breakout. Breakout is you're trading the momentum, and you always have a better underlying strength with you because you're buying at a breakout. You're buying when the market has proven that it wants to go that direction. Now the downside, of course, is that you actually buy at the high, but that high can become the new low, right? Because when you break out the resistance becomes the new support. So even though you're buying at a high, but the high can become the new low. Same thing if you sell at the low can become the new high. So nevertheless, buying the breakout, the very big advantage is that the momentum is in your side. Buying or selling at reversal, the biggest advantage, of course, is the price. You're getting at a better price. But the biggest negativity is that you are actually going against the momentum, right? You're actually buying when the market go against you. And the thing is, you have to always keep in mind that you never know whether it's a reversal or it's you never know whether it's a retracement or it's a reversal. So no matter how convicted you are, you say, hey, you know what, EuroCAD is gonna go down because I'm strong, I'm bullish in Canadian dollar, bearish in Euro dollar. The thing is that you are right fundamentally, but you never know how much of the retracement the price action is going to do. And you never know how strong that retracement will actually become a reversal in the short term. So that really comes down to where do you put your stop loss and how do you trade this thing. And that's really where your personality comes in. That's really very subjective. It's really depend on your way of trading. But for me, I always keep this one fact in mind is that you can never be sure in any trade. In every individual trade, you always only have 50% of chance. So whenever we talk about the winning rate, that's only in an aggregated scale. It means if you do 30-50 trades, then you can pull out the data and say, hey, you know what? In these 100 trades, I win 70 out of 100. That's my winning rate, 70%. But in each individual trade, you only have 50-50%, and that's just a fact. It's like a flip a coin. You only have 50-50. Now, if you know that hard fact, you will always respect your stop loss. You will always know that there is so much that you don't know in this market. So don't be overconfident just because the fundamental is in your side, just because you draw a perfect trend line, or just because you have done it in Forex Taster 1,000 times. It doesn't matter, because in each individual trade, you only have 50% of win or lose. So that's why, be careful when you're doing a retracement, because that retracement has a very big chance to become a reversal and to stop you out. And you have to be fine with that if you want to play a reversal trade. So that's basically one trade I have, Euro CAD. The other one I have is Euro Dollar. Exactly same thing, short at retracement divided by 1-2 position, and then just give myself a large stop loss. And then really, I like this kind of trading. It's really just very calm. I'm really not worried about these intraday noises. And if I get stop out, I get stop out. Most likely, the retracement has become a reversal. I'm also short Euro New Z. And this I got in at a breakout trade. So this is actually the momentum was on my side. I got in at this bearish candle, but as you can see, we actually didn't go much lower and we retraced back. So right now we're really pretty much just at this triangle movement right now. And then yep, I hope it's gonna go down, but if it's not, that's just the way it is. Right now the trend, of course, is still on my side. Economically, it's still on my side, but I never know. Again, you never know if the retracement, how far it's gonna go, and whether it's gonna become a reversal. Euro Aussie, exactly same thing. I'm short here at this candle. I actually add on 2 position. And unfortunately, it did not go down too much. And now it looks like I'm going to get stop out very soon. But I'm betting on the Australian data later on. Hope that can help me. If not, then I get stop out. Just the nature of trading. CAD Swiss, another trade that I'm in. Same logic. Got in at the retracement. And now just holding it. Same thing as dollar Swiss. I got in at retracement. So that's pretty much it. So you have different way to play around the market. You can either get in at a retracement, or you getting at a reversal. Or you getting at a breakout. It's really depending on how you like to play it. Speaking of that, if you look at US dollar yen right now, it's actually a pretty good trade too. Because, hold on, let me take a look at the PV point. So that was our yesterday's PV point, and it's today's PV point. So actually not a bad trade for dollar yen. I'm actually quite looking forward to it actually. It does look pretty nice as a trade goes on, but nevertheless, I'll do it later on. But right now, as you probably know, I actually likes to do this kind of intraday more than daily trade, and the reason is because, again, like I said, my schedule right now trade really pretty much 24/7, and when I trade 24/7, then I tend to like to monitor the market. So originally, if I do the daily trade, it's going to be very passive. I like to enter a trade and just leave my computer. I don't like to be in front of computer when I'm in daily trade, because I tend to like to play around with it. But since now I'm doing a lot of intraday trade, so that actually contradicts with my daily trade psychologically. I find out myself cannot really hold a daily trade any longer if I'm doing an intraday trade, and that's why I changed my style and really doing less and less daily trade. But I'm still going to give you a trade call for those of you who are not going to be able to trade intraday trade. Still, daily trade, it's a perfect trade to play around passively, and you can actually, make a very good profit without spending too much time in front of the computer. So it's really a good thing I always like to do when I'm traveling or when I'm not available to trade live. So last week, I got out of my pound Newsy trade with relatively small stop loss, about 50 pips. Original stop loss was 500 pips, so I actually lost about 1/10 of my risk capital, almost like 0.1%, which is very nice. Very nice for me, 0.1, 0.2%. And I got out because I got in at this bearish candle fill in, but prior to the weekend, I just don't like it anymore because I don't see too much negativity into British pound, and I just don't want to stuck in the trade all the way until this week. And OPEC meeting on the weekend, the big events, might affect another currency pair, might not. But for me, I just like to get out, and I got out, and today it actually, again, we continue to be stuck in this range area. So if you're still in this trade, you can still hold it. I will really suggest you to just tighten your stop loss. I myself got out already, but if you want to still be in this trade, you can tighten your stop loss at here at 1.78, maybe 1.7850, just above this bearish engulfing candle. And then we're gonna see if this thing will edge lower. You can still hold it. I mean, fundamentally and sentimentally, it's still a very good trade to short. Again, I got out purely because my own psychological reason. It's nothing to do with anything really happened. So if those of you who still want to hold it perfectly well, you can still hold it. Okay, so let's take a look at our 28 pairs for now. Just give me 1 second. Let me pull that up. Okay, so Euro Pound. So Euro Pound, as mentioned, we got a large selling into Euro because last week's ECB comment, and right now we really seem to still be in this range area, just slightly above 200-day EMA, and really I don't see any signal for the trade. Euro Swiss is not a pair I take. Fundamentally, I don't see anything. Those of you who likes this kind of candles, it's a very good candlestick, but again, are you more bullish in Euro versus Swiss franc? Maybe you are, but for me, they both are very weak. I don't see a particular strength or weakness. That's why I tend to stay away from this pair. Euro dollar. Again, another strong bullish engulfing candle. That it does not mean we're going to buy it, because fundamentally dollar is strong, but don't be surprised again to see this thing keep edging higher. As mentioned, you have both direction to go prior to the Federal Reserve meeting. Today, tomorrow will be the point for rest of the trader to price in. So really don't be surprised for any movement in any direction for euro dollar, for any dollar trade, right? It's nothing to do with fundamental or sentimental. It's really how trader likes to price in for now. For me, I'm not going to do any trade. I'm not going to buy euro dollar. On the contrary, I'm actually going to sell intraday at the reversal, at the retracement. Sorry, Euro Aussie, we're still stuck in this retracement. Euro CAD, again, same thing. You have overextended, and now seems like a great candlestick to buy. Again, not for me, just because fundamentally I don't like to go against with the fundamental. But in the short term, don't be surprised to see a lot of buying power into the euro dollar. Right now, basically, I'm trying to say is that it doesn't. You don't need to explain the price action for now at this point, because the sentiment is just too much to drive the market. Euro yen, again, a sort of like a range bound for me. Pound Swiss franc, another range area. Cable, another range area. And pound Aussie, same thing, range. Pound CAD, it's not much movement. Same thing, pound New Z, we just mentioned that still in the ranging bound. And pound yen, it's still edge higher slightly. Swiss franc, Japanese yen, again, the two currencies are same personality. Nothing really for me to trade. Now, a lot of people look at this saying that that's a good kangaroo tail to short. And actually, you're right, because, but it just depends on, are you more bullish toward Japanese yen, or are you more bullish toward Swiss franc? And honestly, they both are equally weak. So if you look at the trend, and maybe you know that, we seem to be more bullish into Swiss franc right now, and that's why are we going to go against it? Well, there's no reason for me to do it, so I'm going to stay out. But I'm just saying that when you trading these pairs, then really you can trade just with price action, because there's not much to talk about fundamentally for these two pairs. They both are really in the same category, so you could trade fundamentally. You could trade in just pure price action. You could say, hey, I'm gonna short whenever I'm hitting this kind of important 144, 144.50. I'm hitting kind of important wrong number. I'm going to short it. You could do that. It's not my strategy, but it's just that that's how you really analyze a pair, just to see exactly what is the personality of these two currency. Dollar Swiss, apologize for all this drawing. As I say, like I'm having an intraday trade right now. Dollar Swiss, same thing. We have a selling into a US dollar. Again, it's not I'm not gonna short it fundamentally. Dollar CAD broke down 200-day moving average. It's very significant actually. So really, the whole thing might turn. And again, the thing is that they both are strong currency right now, and that's why it's hard to sell one or buy the other. But if all things are equal, I am more confident into US dollar than Canadian dollar. It's just Canadian dollar itself is not doing well economically. All this strength into Canadian dollar is really due to the oil market, and the oil market is not even that certain. So whenever you have an oil market dropped or retrace, it's where you can buy dollar CAD. But right now we don't have any signal, and we really want to wait after Wednesday to get into any dollar trade for a daily perspective. But it's very interesting that it dropped so much, and it might be a good pair, maybe a good position to buy later on. Dollar yen, another surge higher. We actually reached higher, almost 116.15, and it's just one way straight. Really no other chance for it to go down. And if you look at daily chart, you still have a lot of room to go. And dollar yen, it just continued to go higher. So of course, fundamentally, you still want to buy it. A lot of people want to short it because they feel like it's such a good position, and they are right. If you draw a Fibonacci chart, you are really at a lot of important area. You just passed 50%. You're right below 38%, and if you want to do that kind of trade, that's perfectly fine, because if it's daily trade, you actually can sometimes make a good profit if you're doing this trade. But just understand you are going against the fundamental. And if you look at this chart, it passed through 76%, 61%, 50% without ever retrace, and now we are at 38%. So who says that it's not gonna go 23 and all the way until 126? It might very well go there without a significant retracement. Well, because fundamentally it is a strong currency to go up. So that's why be careful if you want to buy a retracement. Always take into consideration that you are buying against the fundamentals. Aussie Swiss, Really not much going on. It's still a pair I'm looking to buy intraday. Aussie dollar. It's quite a neutral pair actually. Not looking to buy or to short. Aussie CAD. I'm actually more, again, it's hard to say which currency I'm in favor, but right now I'm more favored into Canadian dollar, to be honest with you. So Aussie CAD, it's not a signal for me. Aussie Newsy, same thing, sort of in this range area. Aussie Yen, keep aging higher. Swiss have a bearish signal today. Okay, not something I will sell. I will actually buy at a retrace. Swiss and Yen, buy at a retracement. New Z Swiss, New Z dollar. Now, this is not good enough for me to buy a breakout New Z Swiss. I mean, it's good, but because the breakout, I really want a good solid candlestick, and this is just not good enough. We're not closing high enough, so I don't like to take this kind of trade, or I don't like to recommend people taking this kind of trade. New Z dollar on the other hand, it's a very good signal. This is a very nice solid candlestick that we like. However, fundamentally, it's not a pair I like to buy or sell, because they both are strong. New Z CAD, same thing, both are strong. And New Z Yen keep aging higher. So again, I really would not recommend you take any daily trade for now, just because the Federal Reserve meetings coming out, and we also have a lot of other other economic data, which I'm going to pull out right now. So if you take a look at just give me a second. Yeah, if you take a look at this week, so later on 7:30, another half hour, we have the Australian data. 9 o'clock, we have the Chinese data. So these two are going to affect Australian dollar a lot. Of course, we're hoping to see the data going higher to help my trade. Tuesday, we have a CPI from British pound. Of course, this is important for you to do if you're trading the British pound. Again, the game plan is very simple. If you have a positive deviation, you can buy it. If you have a negative deviation, you can sell it. But understand it's all going to be short term, because on Wednesday, you will have I'm sorry, on Thursday you will have the official bank rate from Bank of England. So that's why, if you want to do it, do intraday trade, and do the one that you already have some probability. That means if you want to buy British pound, buy against Japanese yen or Swiss franc or euro. If you want to sell British pound, sell against US dollar, Aussie dollar, sell against US, Australian, or New Zealand or Canadian. So that way you already have some underlying fundamental going in your direction. So what is the deviation? Let me give you right now, so you can take a look. And again, you don't really have to trade. You don't have to jump in at exactly moment. That's why I like Forex Factories, because sometimes if you're getting about 2-3 minutes late, you're actually getting at a much better level. And that's my personal experience. Sometimes I jump in with economic data, I'm actually getting at the worst level. So if you just wait a couple minutes, you're not losing anything. Basically, that's what I'm saying. So December 13, CPI. This is, just give me 1 second. Let me refresh my page on my other computer. So we are expecting 1.1%. And again, economically speaking, the reason the CPI keep going higher is nothing to do with their economy. It's everything to do with their currency, because the currency is hugely devaluated. It makes everything become expensive, and that's why the CPI is going up. So don't take it as a sign of economic strength. It's just purely the relationship between currency and inflation. So yearly, we are expecting 1.1. If you see anything above 1.2, that will be a positive surprise. If you see anything below 0.7, that will be a negative surprise. So that's a number you want to take into effect. That's where you want to buy British pound or sell British pound if you want to do it. If you are not outside the deviation, then I would really suggest you to use retracement. Then just wait for a couple hours before you get into this kind of trade. So that's the important thing on Tuesday. And we have Taken Manufacturing Index from Japan. This is important to take into effect to see how are Japanese doing in terms of the economy. Not a tradable events, but a good global events to take into consideration. Wednesday, you have a climate, you have basically employment data from British pound again. Again, you can trade with deviation. Average earning expecting 2.3%. If you see anything above 2.4, that's a positive surprise. Climate count change 9.8 thousand. If you see anything above 15,000, that's a positive surprise. 15,000 is a positive surprise. Anything below 2,000 is a negative surprise. Unemployment rate 4.8% expectation. If you see anything above 5%, that's a positive surprise. Anything below 4.6%, that's a negative surprise. And if you want to, yeah, that's pretty much it. Did I give you everything? Yeah, 2.3%, 2.6% positive surprise, 2.2% negative surprise, and 15,000 positive, 2,000 negative, 5% positive. Oh, I'm sorry. This is unemployment rate. So 5% negative. If you have 4.6%, that's positive. And then you have again PPI data, core retail data on Wednesday. Now the question is that because the Fed Reserve fund rate is coming out in the afternoon, so this is actually not tradable. It's just expecting very thin liquidity in this kind of thing. Really, not many people are going to trade US dollar prior to the Federal Reserve event. So yeah, Tuesday, of course, this is really highly anticipated. The thing is that don't jump in at this rate. If you have 0.75%, don't buy it because it's not a surprise. So you only want to buy if you have a rate above that, which is highly unlikely. But if you have something that is unchanged, you can definitely sell it. So that's where the surprise comes in. If you want to do the trade instantly, looking for an unchanged decision. Because if you have an unchanged decision, that's where you can sell US dollar, as that's a huge surprise. If you have a rate hike, do not buy it because that's already priced in. It's not a surprise. And then later on, really, just listen to the conferences. Every news channel will broadcast it live. Bloomberg, Fox, CNN, especially Bloomberg, you can always watch it for free. I'm not sure, maybe FOMC website you can watch webcam for free as well. So yeah, watch out the conferences and listen to what the chairman Yen has to say and what Q&A questions. Wednesday, Asian station have employment data from Australian. It's not a tradable event for me, but it's definitely going to play effect for Australian dollar. Thursday, you have Swiss franc interest rate, not a tradable event, but expecting to be unchanged. And then you have Bank of England official bank rate, again expected to be unchanged. So really what we want to look at is the policy summary. And then you have a US data coming out at 8:30. Now, we're not going to talk about this because this is not important until we know what happened on Wednesday. So everything after Wednesday will not really be discussed right now because we don't know where the direction is going to go until the Wednesday meeting. So really, this is the highlight of the week. We're only going to know what's going to happen after Wednesday. Then we can talk more about how we're going to play a Thursday data over Friday. Okay, so as for now, just be careful. Don't get into a trade for too long and really try to set everything to break even before the Wednesday events. And on Wednesday, if you want to trade the event, only trade if we have an unchanged result from Federal Reserve, because that's going to be a huge surprise. Otherwise, if the rate is hiked, that's nothing new, right? So you actually want to look into short, maybe at a good resistance level, if the rate is expected and it is hiked. Other than that, watch out for the conferences. And I'll be back tomorrow with another daily analysis. And let me know if you have any question. Feel free to comment below and let me know if it's helpful or not. And I'll be happy to answer your question. Thank you very much for watching. I will see you tomorrow again. Thanks. Bye-bye.